Okay.
Cool. Hi, everyone. My name is Andrew Williams. I'm the founder of Remote Tribe. We're a digital nomad blog and a community. And we've received a lot of requests lately about digital nomad taxes. It's really, really a big problem for a lot of people. So we're here to talk with international lawyer Mo about how you can solve some of the issues and some advice we can give you. And I'll let Mo introduce himself.
Hi, Andrew. Thank you so much for the invitation. It's been a pleasure always helping digital nomads and remote workers with their ongoing issues. My name is Mohamed Aboshanab. I'm an international lawyer. You can always call me Mo. I've been a remote worker for almost 10 years now, and I during the last 2 years of shifting my business to be totally 100% online, and I'm helping digital nomads or remote workers and global citizens achieve the best in terms of taxes, residency, citizenship, and company formations worldwide.
That's great. That's great, Mo. So yeah. All right. Mo, I think we've got an agenda for today. If you can pull up the PDF we have for our audience, and we can start talking about some of the probably most frequently asked questions that we get in our community.
Yeah, definitely. Yeah.
See if you can share it, Mo.
Okay. Just if you
or maybe.
It's my first time using this, so
no worries.
I'm sure it's already on the drive.
Window entire screen. I think I can share mine.
You can do it from your side.
Perfect.
Oh yeah, if you already have it in computer, yeah.
Here you go. So I think there is a really, really big misunderstanding and also misconception about the tax residency vs the physical residency of a person. So I think we should clarify what's the difference between the two of them, and what happens if people mix them. So go ahead, Mo.
I mean, the first thing when I would like to do like a small intro into this. When you shift your work to being a remote worker or decided to be totally a digital nomad, anything that you have done wrong could be fixed. Okay, so don't stick into the wrong mentality that the tax authorities will come and haunt you and will audit you and make your life miserable. That is one of the nightmares that make life people miserable. It's like, just take this idea out of your mind and just deal with taxes as anything in life. Just take it as your bank account.
So what you're saying is, so what you're saying is basically it's never late to fix things, and you should always have this in mind, even though you haven't done it for a while.
Yes, that's the thing. Don't just overthink the idea again and again. I've done mistake. They come from me. I mean, this. You can say this end of life or end of everything mentality that the tax authorities, whatever your home country, whatever it's UK, US, Canada, Australia, New Zealand, EU, they will come after you. No, it's things doesn't happen. I've worked inside the tax investigations in different countries, and I've seen how they process that kind of investigation. One mistake or a couple of mistakes would not lead to something wrong. It could be fixed. You need to understand. You need to understand your rights and responsibilities, because tax it's not one way; it's two way. You have rights on the tax authorities or the country that you're paying taxes, and you have responsibilities. So if you know how to play by the rules, you can get the best out of your situation, whatever is your situation.
Yeah, and also when it's time to declare a different tax residency than your home country residency. So let's say you're registered in the UK as a citizen, and you've got an address there. I'm giving you an example like that. Could be any country in Europe probably. And when is it time to declare another like tax residence, or literally move all your tax residence to another country? I mean, maybe you can give us a few examples why you would do that, and also an example of like moving your tax residence, for example.
I mean, the first thing that you need to consider is that you need to have a short plan, or you can say a very short plan. That could be like a couple of months. And then you have a short plan that could be like at least 6 to 12 months. And then you have a long plan that could be at least a couple of years. When you start your journey,
so it depends. It depends on the time you're away from the country, how much you're traveling. So you have to kind of foresee that, so you can optimize the tax and then look into it, basically.
Definitely, yeah. If you're just going for a couple of weeks or months, is less than 6 months, so that's called like a very short plan. If you're moving more than 6 months, that's like you can say semi-short plan, and then the long-term plan could be like a couple of years. And
Okay.
each stage that you will have different rules and regulations that can apply to you. My advice for anyone: don't just go for the people think that I would like to go digital nomad. I would like to cut all my ties to my home country. I close the bank accounts. I sell my properties. I close any the business accounts or any companies that I have, and I will be 100 tax free. No, that's the worst thing you can do. You have to take it step by step. And in some cases, it's much better to keep ties with your home country, because that could be much more beneficial on the long term. Because if you cut 100% ties, it will be extremely hard to start these ties again. You will be considered even in your home country as a newcomer or a new
As an
immigrant.
immigrant.
You don't have any credit history, don't have anything. So you need to understand the rules step by step and build that mindset until you'll be able to achieve the best scenario for your situation.
That makes sense. I know a lot of countries, I don't know if in Europe, but all over the world, they basically, if you live less than 6 months in that country, you don't pay tax for the 6 months. So here you go, there's already an advantage of still living there for a while, and then, keeping your residency, because you get like tax free for 6 months, correct?
Yes, but you have to, I mean, it's not, there's many things in tax doesn't happen automatically. No one will go and check your entry in and out of the country and I've been 6 months, so I'm not baby. No, you have to inform the tax authorities of your home country that you are going away. And there is like, for example, for the UK, there's forms to tell the HMRC that I'm going. They ask you in the form, are you going permanently or you're going temporary, and which country you're going to. So if you don't have a plan to fill the form, that could make things worse. Once you tell the authorities about something, it's extremely hard to change it. If you done a mistake, that's fine.
Yeah.
But if you're planning to go, for example, from the UK to the United Arab Emirates and tell them I'm going temporary, I'm staying there for a couple of years, and my tax residency will be in the United Arab Emirates, so that's your plan. But if you're planning to test the waters, don't inform the authority that you're going until you have...
Because you could do more harm. Yeah.
Yes, that's the thing. You should have a plan on the other side also. What you will do there, how much it will cost you, what kind of benefits that you will get.
Exactly. So I think it would be fair to look into one of your destination where you want to set up the tax residency, see what conditions are there to be met, and then kind of match those with your home country and see what kind of tax benefits you can have all together. So you don't make any mistakes, because they could cost you, and they could cost you a lot of time because of bureaucracy and time on phone and all that stuff.
Definitely.
Right.
That's one of the things.
And Mo, how about other countries in Europe that you know about, like France or Spain? Is it easy to move the tax residencies to Dubai, for example? Like, did you have clients like that? Like, I mean, I know UK has a pretty transparent tax system, but how about other countries in Europe? Like, how easy is it to move your tax residency altogether?
I mean, normally I put countries into two perspectives. I mean, there's like simple ways, like the UK, you just need to fill in form and then you're free to go. You just need to watch how many days you spent in the country, what kind of ties you still have related to your home country. And there's other countries, which is like in the other extreme, which is like the US. If you're a US citizen, you have still obliged to pay certain amount of taxes to the, because it's citizenship-based taxation. You'll not be able to be 100% of the US tax system unless you are re-announce your citizenship and say, I don't want to be American citizen anymore. And then there's a gray area. We can say between the UK and the US, that's most of the countries fell into the area. They have, each country have their own certain factors that you tell them, I will not be tax residency anymore. It could be a mix between how many days you stay in the country, or if you are benefit from the tax system in the country. And tax system mean that you are not just paying taxes. If you are still on the in the health record of the country itself, if you have access to like family doctors or hospitals, or you have kids in the school, or you are collecting any tax benefits from the country, that's all considered that you are still a tax resident, even if you are not living in the country anymore. I have many clients who say,
very interesting.
Yes, I'm an Irish citizen. I've lived all my life in Ireland, and I now live in Cyprus, but I'm still having like tax obligation, or still have responsibilities. I'm still having my kids, or still having registered in the doctor or the health service in Ireland, and I never tell them I left. Do I be considered tax resident? Mm-hmm. That could be like a gray area. So we have to make it step by step. Are you going to go? You have to cut as much as you can say benefits from your country. So you'll be able to tell them, I'm not a resident anymore. And when you tell them I'm not resident anymore, you have to be ready with the other country. And it's like a process. It's not something that you will wake one day in the morning and say, I'm 100% not resident in my home country. You still, if you still even have a bank account, mobile numbers, if you still have a company, that's like a process that have to be taken step by step until you understand how you can use the system for your benefit.
So Mo, would that be fair to say that you need a few months to do the transition? Can it take more than a few months? Can it take towards a year to do a transition of tax residency?
It's depending on your how your setup is complicated. If you have never been outside your home country for all your life, it will be that's the most hard thing to do, because you will need to set up an alternative place. You need to have a resident in another country. You need to have a bank account. You need to have a mobile number. You need to have everything that you have in your home country and the other one. So you can switch between what you have right now to the other one. And you take it step by step. Mm-hmm. At least, I advise my clients at least 6 months. At least 6 months. And do the switch gradually, step by step. Okay, and never close your bank account unless you would like to go cold turkey, or just I don't have anything, because I mean
disappear from the face of the planet. Yeah,
you will have other bank accounts, but closing the bank, anything that you have closed could be open, but opening a new bank account in the current situation is extremely a complicated process. Some banks will allow you to use your new address in the other country. For example, if you are from Ireland, you can use the address in Cyprus. But for example, with the Brexit in the UK, you will not be able to use another address outside the UK. You still need to use an address, even if the address is not yours. You can use like there's many services offer you. You can use the address as your bank account. Some banks, they don't. I mean, as long as you keep your account healthy and using whatever address you use, that's fine. And some other banks would say no, that's like a rented address. That's not residential address. They can ask you to change it or send a proof,
like a PO box or something.
Yes, no, like
a PO box. PO box is usually they're accepted.
No, never use a PO box. That's in anywhere. That's PO box is just receiving parcels, or if you would like to use a different address or alternative address with your bank, there's something called street address. It's alternative to a PO box. Street address mean that could be residential address or a business address. The difference between them, that residential address could be like a block of flats or a building that actually people live in it, and one of the flats or the apartments have an agreement that many people can use the address for their home address or banking. That could be residential. And when the banks see
That's
this is residential,
that's a great tip.
yes.
Yeah.
And when the banks see that this is residential address, 99% they will not ask you for it.
No problem. Yeah.
And there's also a
because
business address.
it is. Sorry to interrupt, Mo, but I know, again, I have a lot of questions from people about the physical address and how they can keep a physical address. So this is one way to actually keep an address in the country. I know at least in the UK, you can rent this kind of services, and then you can buy a residential address basically, and you're going to receive all your letters there from the bank and other institutions, which is a good hack.
Yes, yeah, UK is one of the most flexible countries. That UK and the US, it's very flexible about the address that you can use. Just make sure it's actual residential address and it's not blocking.
Yeah.
It's not in the blacklist. Some of the addresses are being used by scammers and fraudsters, so it's being blocked. If you try to use some of the banks say no, this is a shared address. I'm not be allowed to put in the official documents.
Fair enough.
Yes,
and Mo, this leads us really nice into establishing a tax residency. So maybe you can walk us through the steps of. I know it's not the same for all the countries, but maybe you can give us like an overview of how you actually start establishing a new tax residency in some countries in the world that you know about.
Actually, it's. Most of the countries have the same. You can say the same process with the different steps. For example, Portugal, or you can say even the US, or you just need to apply for a tax number. You can say many countries allow you to apply for a tax number outside you don't have to be physically there. During the pandemic, the tax authorities changed their ways. You can appoint someone like a local tax accountant, or even a lawyer, or even someone who are just a freelancer, to apply for your tax number on your behalf. They will ask for a copy of passport. They will ask a couple of official documents, and then once the application was approved, you will get a tax number. This is the first thing that you can do to establish tax residency in a different country. And once you have the tax number, you will be able to do a lot of things. You can open bank accounts. You can establish even. It's like in some destination they consider the
birth
tax
certificate.
Yes, that's where
exactly.
I've now started my legal residency, even without visas or anything, in a different country. And tax residency here, it's just once you apply to the tax number, I'm just starting my journey to be a legal person in the other country, and then you start building on top of this whatever
on
services
top of the number.
Yes, that's the thing.
Yeah. And Mo, in your experience, what would be the easiest tax residency, like the less bureaucratic tax residency you can get? Give us a few examples, maybe some countries that are low bureaucracy and fast moving when it comes to getting a new tax residency.
What I can tell you, there's like the more the country are not digitized, the less the country are digitized, the easier they approve application, because it's paper based. They just fill the form, and I've seen like in Turkey, they just you just fill a form. They don't ask anything, just fill a form, and a couple of days you get the approve. Okay, it's a paper based. You just need someone to understand. You just need someone to understand the Turkish language.
It's easier if you use paper. You're saying that it's easier if you use paper in some countries than the digital countries like Dubai, for example. Is that true?
Yes. Yeah. It's like
very interesting.
For Dubai have a very or the United Arab Emirates have a very you can say complex situation about this. They don't issue tax numbers from day one. They issue residence number, or you can say ID number. It's called Emirates ID, or it's called EID. Emirates ID is your Equivalent to the UK, it's like the national insurance number. Equivalent to the US, it's like the social security number. And this ID, it could be used for everything. It could be your ID, it could be your tax status, it will be used on the banks, it will be entry in the country, outside the country, dealing with anything that related to the government, even applying for a mobile number. You'll not be able to do anything unless you have the Emirates ID in the United Arab Emirates. But if you compare it, I guess, talk about it.
Yeah, I guess comparing to other states where you get your tax number first, I guess in Dubai, in the Emirates, you need this EID first. That's the very first step, correct?
Yes, you'll not be able to.
Okay, so it works a bit differently.
It's differently. It could be the tax ID first or the residence ID first. And some countries will not allow you to do anything in the country unless you have a legal residence. A legal residence here doesn't mean a visa. An entry stamp. No, you have to have, for example, that's from the other way around. For example, the UK will not allow you to apply for national insurance number unless you have a residency more than 6 months. The visit visa or the entry stamp or whatever you get into the country with a visa or a stamp will not allow you to go to the tax authority in the UK and say, I would like to get a national insurance number. So this is how
does it mean that
countries are different.
A tax residency? Yeah, does this mean that if you have a tax residency somewhere, it doesn't mean that you also have like a physical residence there? Is that true?
No.
Or the other way around?
It's different. It's depending on the country. For example,
so you don't actually have to physically be in that country if you have the tax residency. You can be registered in one country and live in another, correct?
Yeah. Some countries allow you to do everything remotely. Okay. Or for example, the UAE allow you to start the process remotely unless you be there in a couple of days. They collect your biometrics, your photo, and then give you the card, and then you're off to go. For example,
that's
Paraguay.
Great. So when you arrive, you're almost good to go since you arrived.
Yes. For example, Paraguay had the same process, but they allow you just to go there to collect the card and have like an interview meeting with authorities and give you the residence card. And once you have the residence card, that's where you start. You don't have actually to live in the country when you get the residence card. Unless you would like to apply to be a citizen of this country or apply for a long-term residency, or there is certain way you need to stay in the country physically. But once you establish yourself in a different country, you are free to go. There's no one, you not go to the airport say you have to stay. No, it's depending on your short-term plan and long-term plan. That's why I ask anyone, what is your plan for the next 5 to 10 years? And then we start.
It's a very good question that must be asked all the time. Yeah,
that's it.
Great. Yeah, I know indeed about Paraguay that you have to go once and do the papers with a lawyer, with a solicitor there. You get your cedula, which is the national ID basically, and once you have that, you have to come back in the country every 3 years or something like that. So once you have your tax residency in Paraguay, you go there once, and then you're off the hook for a few years. Probably things will change, but for now it's pretty good. So you don't actually have to live in Paraguay; you just have to go there once, and you're all good. So happy days.
Yeah, that's different. That's the same thing. If you compare this situation with the UAE, they allow you to stay off for 6 months, but you have to visit 1 day each 6 months. And this visit, I've done it even myself. You just need to go, even in transit. You can go to the airport in Dubai or Abu Dhabi. You just get to the transit. You get into the country using your Emirates ID, and you just go back to the other side, just in and out. If you have done this each 6 months, your residency will be valid. They keep changing the rules. Sometimes they make it like 9 months or 12 months, but the standard is 6 months. So your residency will actually be on the system.
Yeah. So in this case, it means that you basically have to take like a stopover in UAE once in a while, every 6 months. Just go in, go out, and then get the next plane. So it's pretty straightforward. It's kind of you don't really have to be there really. It's
definitely, yeah.
Yeah, that's great. Really good stuff, Mo. Thanks a lot. So I hope our viewers will find this very, very useful. I did. So it's already getting a bit more clear for me too. I've got some experiences in residencies, but this was really good. So when we talk about company formation, I know you said it several times, and also from my experience, it can play hand in hand with a good tax residency. So I just want to discuss a few things about companies and residencies. So basically, you can open a tax-free like a company that doesn't pay taxes in maybe a tax haven, and then couple that with a really low residency tax. So you also pay low tax on your physical person, or you can keep your residency that you have at the moment where you pay normal taxes and then register a company where you pay low taxes in a tax haven or something like that. So how would this work? Like how should people think about the tax residency coupled with their company tax, for example, company formation?
As we have seen the difference between the tax residency and the physical residency, we need to put like a line between your, you can say, personal tax affairs and the business tax affairs. If you, let's make an example. I'm Joe. I'm British citizen, and I've lived all my life in the UK. And someone tell me, if you go to the United Arab Emirates, you'll be 100% tax free. So I've taken the plane, I've go there, I get my Emirates ID, I find a job, and I consider myself 100% tax free. Now it will never work that way. There is a different way you can do it, where you can say, okay, I will establish a different entity and a different company. When you establish a company, the company will have a different tax status from your side. If you are obliged,
it's a different entity, basically.
It's a different person. It's
so
like the legal. As I will tell you from a lawyer perspective, that the company is like an entity like yourself, but it's not natural. It's a company entity. It have a tax status. It have a start date, which is like the birth date where the company is being formed. And once the company is dissolved, that's where the company die. It's like the law look to the company as a human, not a human being, but as a non-natural person. There's different legal interpretations for a company, but it's not you. If you have $1 million in your business bank account, that's not your money. You can, if you switch the 1 million from the business bank account to your personal, that's where you can be obliged to pay tax on the 1 million. But if you keep it on your business account, that means they don't have to pay anything, depending on your country.
And this is where a good tax residency can help you optimize the tax, right? Let's assume your business is doing well, you've got money in the bank, which is not yours again, it's part of the company. And this is where you want to couple your good business, like on low taxes, with a really good tax residency. So how would that work, Mo? Give us a few examples and a few good practices.
I will tell you a very simple example that I've done hundreds and hundreds of times from my clients. An EU national or a UK national who have an income, an online income, not tied to one place. The easiest and the simplest thing he can do, he's open a US LLC. The US LLC have the lowest tax, especially on the states in the US, doesn't have taxes like Florida, Delaware, Wyoming, where they don't charge local taxes compared to the EU. So that's the first thing he can do. It's very simple. It's straightforward. All his business affairs will be treated as a US company, so he doesn't have to pay VAT in the EU anymore. And the simple thing, he doesn't have to be in the US. He just open the company, get you can say it's called EIN number. That's like tax number for the company, not himself. And he opened the bank account. Yes. He's up and running. He can switch everything from the EU or the UK, all the income he received, which is highly taxable, to the US company. He doesn't need to move. He doesn't need to do anything. Yep. that's the simplest and cheapest way to start or switch your, you can say, tax affairs to get much more lower rate, and then you can use the structure for other countries.
So there is a new low tax entity being born in the US, which is your company. And then you as a person can live anywhere in the world, and your business will live in the US, and you're going to be under the US law
Yes.
for both the advantages and disadvantages that the tax has there, which it can be really rough if you don't play by the rules, but it also can be very rewarding if you pay your taxes, which are low anyway. So yeah.
In some cases, you just need to pay the franchise tax if you know how to, if you have a good accountant and he understands the process itself. And you don't have to live in the US. You don't need a visa. You don't need
exactly.
I have clients who actually not be able to travel to the US for many reasons, but they still able to maintain the companies and the bank accounts and the structure. But I
so you
advise
don't even
anyone.
Have do you? Yeah.
Yeah.
Go ahead. Please finish your sentence. Yeah.
I mean, I advise anyone who would like to go the structure for the US LLC that you have a tax residency, or can say a paper residency, in another low tax country like the UAE or Paraguay or even anyone from like Bahrain or any. There's many countries, or even a tax. Can tax haven countries like Cayman Island or Bermuda or the similar. I mean, the structure for the US LLC plus residency in a low or a zero tax country, that's the best thing you can do for your online business.
It's a winner.
Or your.
Yeah.
It's a
and
winner.
The different combinations, like
right.
it doesn't really. Yeah, exactly. It has to be structured right. That is not like only one formula that can win across the board. It can be different combinations of, I guess, different countries. You can register your company in probably another country, and then you can have your residency in Dubai, for example, or I don't know, maybe in Greece. Like if you go to one of their programs, so it's not necessarily like a one formula that fixes everything. I guess it can be discussed depending on the needs of the client, or depending on the lawyers recommend as well, and tax advisors.
Yes, definitely.
I'm guessing.
Yeah.
Mm-hmm. Great. Okay, that's cool. So there are definitely plenty of options to optimize your company tax, your residency tax. There are a few countries, quite a few with like low tax. We discussed about them on the blog, from Cyprus to Greece and Gibraltar and Malta and Paraguay, for example, in South America. And then in terms of low tax company formation more, I think we've got US, we've got Cayman Islands, and what other options do people have in general, like a normal person, not a millionaire? What would you say other countries are friendly with company tax?
For example, in Europe, you have Portugal, you have Greece, Malta, and Cyprus. Portugal have the NHR residence program, which give you tax-free for 10 years, but you have to be very careful about after the 10 years. Malta also have a couple of residency program. You don't have, it's not tax-free 0%, but you can pay very flat rate amount on yearly basis, and you consider Maltese residency and your tax, your global tax residency in Malta. And one of the programs, you don't have actually to be in Malta. You just need to rent a property under your name and pay the rent and pay like a flat tax in Malta. Cyprus is,
so I guess with Malta, that's the great thing about Malta, is that no matter how much money your company makes or you as a person make, it's flat. So even though it's higher, there is no threshold on that tax. It's just a flat tax.
It's a flat, yes, and they have different programs. It's depending on actually would like to be reside there or just visiting or establish. I call them like a paper resident. You just have your actual. You just apply for the government and give you everything, and you just maintain the rules and regulation on this residency. So you declare tax a resident in Malta, and I think other countries are trying to copy the same.
Is that open? Yeah, is that open to Europeans as well for the Malta program?
No, no, no. That's
So
for
just
non-Europeans.
non-Europeans.
Yes, they
Yes.
have
Okay. Great.
another program for Europeans because they don't make they don't want to make issues with other European countries. They have
Of course.
another programs for especially EU citizens. And when we say EU citizens, that means British people or UK passport holders are not EU anymore, so they can use the global residence program in Malta. But any EU citizen have to. There is a different way to move to Malta at the tax residency because it's much easier.
Yeah, I see. Okay, it's Malta is kind of a long story. We wrote
Yes.
about it on the blog. So if people have questions, just please come to us. We can definitely give you some piece of advice. Cool, Mo. Thanks. I think that was pretty interesting. So again, plenty of options to register your company. Would you say, Mo, that it's smart to open up a company straight into a low tax country, or is it really hard to move your company? You have to close it down wherever you have it open in the UK or in Germany, for example, and then open up a new company in the US. Would you recommend opening up a country? Is it easier if you open it up in a low tax country? I guess so.
Actually, it's very easy to open the process, but you need to understand what kind of compliance or tax reporting or accounting that you have to do for your company. So it's cost. That's the first thing you need to consider. And
Yeah.
in many cases, I don't advise my clients to close the company that's in high tax countries, like in Germany, in Austria, in Netherlands. Don't close it because there's some business affairs. If you are doing like EU to EU business from your high tax country, if you tell them I'm having another US business and this business is not in the EU, they might say no. We're not. We only work with EU businesses, and I've seen this in a couple of times, especially with business arrangement or they have like a tax incentives to deal with EU tax businesses. But if you're just 100% online, if you're receiving like freelance income or anything that's not related to one country or one region, they doesn't matter whatever it's UK or EU company or US. You just need to switch and always consider that they might treat you as a new account. You're not just switching because if you're dealing, for example, from Google, when they tell them I'm moving from the EU to the US, sometimes the prices could be go up, go down, the rules could be changed. So they might consider this is a new account or a new, it's not you anymore. You, in many cases, you not just be able to switch the address. Basically. Yes. So it could be easier or could be harder. So you need to understand the both sides here.
So to sum it up, don't rush to close the existing company in Europe because you might have issues. Just consult the lawyer or the tax consultant, see the steps you have to take so you don't get into troubles. You still want to invoice your clients, and then take the actions, and then keep both or close one or depending on the case. Cool.
Definitely.
So when it comes to double taxation, it's another question we get quite often. And it's actually a big problem because from what I know, countries have double taxation agreements, but it's quite hard to understand which countries play with which countries. So how should people go about that? Let's say, we've got some remote workers that they have maybe like a digital nomad visa in Greece, but they have a tax residency in the UK. I'm just giving you an example. So how should people go? Just what steps can they take to make sure that they're not being double taxed or exposed as a risk to a double taxation issue?
I mean, tax or double taxation treaties are very complicated documents to understand and read, even for lawyers or accountants or tax advisors. So I have a couple of clients who would like to read documents. They go and read it and they say, I don't understand anything. And always remember, this treatise was signed at least 20 or 30 or even 50 years ago when things are not digital. So don't try to understand it from you can say your perspective. My advice for anyone, it's like when, for example, there is tax treaties between the UK and the US, And it helped that if you are a US citizen who go to the UK, that you will not pay the same, you will not pay tax twice on the same amount that you would like to declare. So it actually help you.
Okay.
It help the countries, but it have to be done on a professional way. And it's my advice. It's not cheap. It's complicated. And if you're trying to understand it from perspective, don't try. It will make your life miserable. If you are an employer,
so you definitely
need
you definitely need a consultant in this case. If
yes.
you're in doubt, make sure to talk to a professional.
Yes.
Yeah.
Yes, that's the first thing. If you are an employee of a company and the company have tax compliance department or HR department, let them deal with this issue. Don't go and do it yourself. Okay, that's the first thing. But if
so
you
should be upfront with a company as a remote worker. You should be upfront with the company saying that you're actually working in a different country, and they should take care of double taxation. But you should be really open and transparent about your lifestyle. Then is that what you're saying? Because they could solve the issue for you.
It's depending on that's right. That's the first. Let the company handle it. But reporting back to the company, some companies they have a very strict regulation. They tell them if you are staying in another country for more than a couple of weeks, you have to inform us. Okay, so you have to follow these rules.
Exactly.
Some companies they don't bother. It's like
they don't
if you are staying.
Yeah.
They don't ask questions. It's depending, as long as you are compliant with your personal tax status, do whatever you wish. Okay?
Exactly. And more, then we have people who do not actually declare, they live in other countries and they're still being paid and taxed in their home country or the tax residency that they have declared. So that's actually what a lot of people do if they're like full-time employed remotely. Some other people are, remote Europe, for example, so they're allowed to work within the European Union. That's pretty easy. The company knows, you know where you are, so everything is transparent. But there are also gray areas where people work in different countries and then don't inform the companies, which it's kind of shady, but it is what it is for now.
Because it's a new thing. It's not been there for almost 10 or 20 years. It's just a couple of years ago. So the rules and regulations still trying to adopt or come up with new ways. So companies could be compliant and individuals also. But if you are, I have a general advice to this. If you're planning to stay outside your high tax country for more than 6 months plus, it will be a lot of waste of time, money, and efforts to keep paying taxes. And you are residing in low tax country, so have a plan.
Correct.
If you're just doing it
have a plan
for a couple of weeks,
move as fast as possible because time is money in this case.
Yes, that's the thing. Have a plan because each month you're paying taxes to the high tax country, you're just putting money in the green because this tax money is not benefiting you. You are not there anymore. Why are you still paying them? No one will care you about if you're living in the country or living in another country. It doesn't make sense.
And more should people with like freelancers who use a company, low tax or high tax company, depending on their incorporation, should they be worried about double taxation on their like physical tax residency as a person? Will that apply to them as well, like the same status as a double taxation person who works in a different country? Should they be worried about that?
It's there is like a simple rule to make everyone's life easier. Get yourself sort your personal tax residency first, and your company tax residency will follow. That's okay. I will give you one example.
Okay.
If you are a UK citizen who open a Cayman company and then claim this Cayman company have zero taxes, actually no. If you are still managing the company from the UK, you will be obliged to pay the UK corporate tax, even if the company is even residing in Cayman. And this is one of the things that people don't understand. So sort your tax residency, your personal tax residency, where you will manage the company. If you are managing the company from a high tax country, you still be obliged to pay some taxes in your high tax country. So sort your personal tax status, and then everything will be followed to it.
There are quite a few intricacies here when it comes to the personal and the company tax. So again, the planning is very good, and knowing what you want to do in the next year or two. Basically, I think more people should incorporate this into their business plan. So even if you're like a freelancer and you want to start paying less tax, I think you should be included in the business plan for next year, for example. So moving slowly, knowing exactly where you want to head, so you can start. If you want to live in maybe I don't know, Europe, then maybe you want to look at Europe, like a low tax residency in Europe. And then, maybe in a year move there whilst you still have your company in the US or something like that. So maybe they should include that in the business plan. I think it's a good idea.
Definitely, yeah, totally agree.
Cool. Very good stuff, Mo. And I think the last thing we have time to talk about, unfortunately, it's the travel expenses that you can claim back. I think that was your idea. I don't do that at the moment, and I should. So I'm just wondering, what are the ways that people can claim back, and who is eligible to claim back travel expenses? It's definitely great. Like, you can save up literally thousands, maybe tens of thousands of US dollars on flights and hotels. So it's a really good hack. What can you tell us about that?
It's a very simple, you can say, very simple, just mindset hack. You can do it. I'll give you an example. If you are having an Airbnb account, open a business Airbnb account under your business name. Don't use your personal name. Okay. Once you have this, in the form itself, they ask you about the company, where the company is located, the address, and if you have a tax ID of the company. Any expenses that any booking that you've done from the business Airbnb account, could be claimed as travel expenses, even if you stay for months.
And is that valid for Booking, Agoda, any other big booking agencies online?
Most of the agencies online you can open a business bank account. You can open a business account on, for example, Booking.com have a business account where you are treating the transaction as a business. And the simple thing you can add, if you just do it for one time, if you're doing a booking for even Booking.com for personal, when you check out, say this, I need an invoice, and put your business account details or business company details and in the invoice. If you have an invoice, the invoice can go back to your accounting or bookkeeping and tell them this is a pure business transaction. It's not personal. Because anything you do...
Is there any risk... Is there any risk here? Is there any gray area? Can anyone question you for, I don't know, booking all these places as a digital nomad or remote worker, traveling and working? Is there a problem?
Yes.
Would that be a problem if you do this kind of...
It's depending on what kind of business you're running, and how it's like what kind of percentage of volume transactions you're doing of all expenses. If you have been doing this for a couple of years, you have record with the authorities that you're already doing this, and as no one will ask you, there's no question to be asked. But if you started just today or this year, and you have an income, you're willing to make a profit like 50K, and then outside the 50K, 45 went to business travel expenses, he could ask you the questions. You're trying to shift or provide something that's not actual. As long as you have enough documentation and compliance, everything will be easier. Everything could be questioned, by the way. But if you have supporting documents, bookkeeping right, if you have record keeping online or whatever system that you use, everything will be much easier. And you have to justify why you are doing all these travels. It's very simple. They can ask, I'm doing this, I'm doing like an online marketing or doing courses or whatever you are doing. You just need to have a explanation for it. That's it.
Yeah. And I guess with remote working, it makes sense as long as you're a business. It does make sense because you're working wherever you are living, basically. So
Yes, definitely.
you live in the same place where you work. So I mean that's very straightforward. Yeah, cool.
Yeah.
Great, Mo. A lot of really good tips. And any other travel expenses when it comes, for example, to airlines or I don't know, other travel services?
I mean, it's like you can claim, even you can Uber, Grab, Bolt, any way of transportation could be claimed back. Travel tickets, staying in hotels, Airbnbs, some meals could be, or some business meals could be claimed at the tax, depending on what you're doing. If they will ask you,
Yeah.
I mean, it's 100% business or pleasure. If you have a justified documentation to say this is only business travel, that's fine. Just go for it.
Okay, that's great. So again, you can do really big savings here, especially for flights,
Yeah.
Transcontinental flights, which are very expensive now, by the way. Unfortunately, they doubled in price since COVID.
Definitely. Yeah.
I know from experience that the flights to Asia have doubled from Europe, unfortunately. So really good to expense that, actually. That would be really good.
Yeah.
Cool, Mo. So just to sum up the short version, basically, from what you're telling me, I think any remote worker, but mostly freelancing people, and also people who want to open up companies and decrease their taxation on their tax residency, they should plan ahead at least 6 months a year. Look at the available options and the lifestyle they wanna have. For example, living in Europe, like having a company in the US, I've said, or the other way around. Also having good experts next to them, we can help as well. Obviously, we're not the only ones on the market, but we can definitely advise people where and how, and we've got a team of lawyers that can do that. That's again very important. And then don't rush. Make sure that you have your documents in order, the accountancy is right. And what else, Mo? What else would you say it's something to remember from this conversation?
Just change your mindset and accept there's many benefits that you can get from going to a different country or establish yourself in a different place.
And I guess that's valid for most of the people in the world with a decent passport, that you can actually do these changes, these shifts in your lifestyle, where you register in other countries, your tax residency, you open up companies in other countries without even living there. So I guess it's possible to most of the people, I would say. Yeah.
Definitely, yeah. Even with low
Great.
with low access passport, yeah. There's always hacks for everyone.
Yeah, exactly. And just one last question, Mo, because this is a really hot topic when it comes to digital nomad visas. Like, where do you see the tax residency and the residency itself in the context of paying your low tax and also living on a digital nomad visa? Do these visas complicate more, or are they really useful? Like, what would you advise people to do before applying for a DN visa?
The digital nomad visas or DN visas are it's always a temporary situation or temporary solution to staying in a country long time.
Mm-hmm.
I see them as not a long-term solution, because many of them just have a 1 year validity or 2 years or maximum 3 years. So you need to have a plan after the 3 years what you will do. The most annoying situation I've seen myself, I've seen other clients, that you establish yourself in a country, you get comfortable with the culture, the way of life, and then after a couple of years, your visa expired and you don't know what to do. So digital nomad visas are still, you can say, I call them baby visas, because they still have come into the war just a couple of years ago. And some countries don't have a plan what they will do next. You should have a plan.
And Mo, correct me if I'm wrong, but also you still pay quite a lot of tax even under a DN visa, because you will be paying taxes in your home country or your country that has the tax residency for you.
Yeah.
So it doesn't really optimize your tax. It's more they allow you to live in a different country for a short while.
it could be more expensive if you compare some of the digital nomad visas on the long term. It's very attractive. It's like something that would be shiny and easy, and you just buy it off the shelf. They try to attract the remote workers, but many countries doesn't have a plan for what to do next. And you see what happened in Portugal.
Correct, yeah.
The parliament decided to close the golden visa, or they see that some local countries or some locals in countries, they don't like the idea that hundreds and hundreds of thousands of people will be flocking into the country, and change the idea. Some countries are very welcoming. As you go, Thailand, Philippines, UAE, Cayman Islands. I mean, some destinations are very welcoming because they have been doing this for years. Some countries have a closed. They don't like the idea that people will be just treated their country as you can say as an Airbnb.
Yeah, that's a good comparison, actually. Yeah, you're right. I mean, in a lot of countries, you can extend your visa forever. You're almost like a semi-resident there. But yeah, I guess in Europe things are a bit more complicated and a bit more bureaucratic, which I can understand up to one point. But it is what it is. Yeah, it's good we have them. It's good to have these options, but it's not necessarily the best option. That's what I want people to remember. Yeah. That's still planning for your taxes, where you open up the company. And again, planning, it's something that you have to do if you want to pay low taxes.
Definitely.
Yeah. Great, Mo. Thanks a lot. So hopefully see you next time with another interesting topic. I hope that our audience will find a lot of value in this stuff. And please, if you have any questions, just drop us an email. We're going to leave the details in the comments and in the description of the video.
Definitely. Always happy to help you.
Bye.
Yeah. Take care. Bye-bye.